Well, hello everybody, I'm your boss, Joe Boss, and welcome to another daily plan. This is the second to last daily plan of the week. Tomorrow we'll have the last stream of the week. We'll try and wrap things up on what we think is going to happen for inauguration week, because the 20th of January, Trump gets inaugurated. Who knows the executive orders he'll put into effect and what his secretaries, the people who he's put in charge of things like defense and the treasury, what all those guys are going to do on their first days as well. So it could be quite a volatile week ahead, quite unpredictable. Effectively, if you're not following the heads of all the departments, of all the secretaries on X, and you have like a live feed of their announcements and of their departments, and a live feed of Trump on Truth Social, like breaking news as it comes as soon as stuff hits their feed. So it could be quite a volatile week ahead as the markets set on a knife's edge as we get new information probably daily. So looking at the FX heat map here, looks like yen has been doing pretty well across the board here, right? What else has been doing pretty all right? Dollar has been holding up well too, but not against yen. It's been kind of neutral against these other ones here, Swissy. Anything else super notable that we can point out on the screen? Maybe Hong Kong dollar, but you know who's trading that right now in the US in the New York session? Don't get me wrong, a lot of people are, but I don't have the account for it. So I'm not terribly interested in doing analysis on Hong Kong dollar at the moment. Okay, so in 27 minutes, we are getting retail sales, and we should also be getting the initial jobless claims. Let's check out the charts. Wow, I wonder what's gone on in the last hour. I tried checking Financial Juice for any breaking news here in the last hour. Best I could come up with is the ECB minutes. Let's see here. There may still be many upside and downside risks to the inflation outlook, which basically says nothing. If the baseline projection for inflation was confirmed over the next few months and quarters, a gradual dialing back of policy restrictiveness was seen as appropriate. Okay. That makes a lot more sense as to why we just had this dip in the euro dollar. We also have our day ahead topics. We're going to be reviewing the US CPI from yesterday. We're going to be going over today and tomorrow's events, because I kind of want to use tomorrow's stream to focus on stuff for the week ahead, because we got a lot of stuff going on. And then I have a special thing here for New Zealand, because we're getting quarterly CPI out of New Zealand next week, which will be pretty important. We could end up trying to want to stay short New Zealand, depending on how it goes, right? Well, we'll just have to wait and see. New Zealand dollar has been pretty weak, though, and there's been more conversations about the RBNZ considering it in their rate cut, in their policy decisions, let's just say. And all should be still good on the stream. All right, so what to start off with here? This is just a quick little update on what's been going on Yen strengthened following reports BOJ officials believe there is substantial possibility of raising interest rates next week. Okay, that's why we have yen strong across the board here. Let's see, it's the strongest against New Zealand, which makes sense because if the New Zealand CPI here, right, fourth quarter CPI, if it comes in around this 0.5 quarter over quarter number that's expected by both ANZ and Westpac, and they give their reasons and they give their breakdowns here, this will probably reduce the New Zealand dollar based on expectations that the RBNZ will maybe get back to its cutting cycle, maybe cut once or twice more. The 50 basis points in February is kind of all kind of said and done. That's like set, especially after this, which was the quarterly survey of business opinions that got released, right? Providing a green light for a 50 basis point cut to the OCR next month at the RBNZ. And that's from this interest.co.nz. Again, if you want these articles, if you want these notes, go ahead and join the trading group. Links in the description. You'll get access to these indicators. So stuff like this where it says like, hey, most of the time the low for the day comes in around here, or sometimes the high comes in around here or around here. This is the arranged probabilities indicator. So stuff like this. And then for the more volatile days, you can probably see stuff like that, right? See how it goes from very, very green to a light shade of gray to a really transparent shade of gray, and then it picks back up. And it also shows you the percentages on the right-hand side here. So you're not just looking at blocks on the left, you can actually see the values that these blocks represent. So given the information that we have so far, I'm not too keen on being short the US dollar going over the weekend at the moment. You know, there is one maybe saving grace for something like the Canadian dollar, which it's in the title of this video. We have a meeting coming out how many hours from now? About 5 hours from now, from Bank of Canada's Deputy Governor, Gravel. And it seems like, wow, that is quite a move higher here. We're now heading closer to that 44 mark. Oh, those yield spreads are quite positive now, aren't they? Yeah, quite a different look from yesterday's CPI, and these short-term yield spreads seem pretty flat compared over the last 2 days, but over the last week, last 5 days, they're still quite negative. So really, how dollar is going to play out is really going to be determined by what Trump does at the beginning of next week. And we really don't know. I saw some things and I posted them here in the commodities channel here on Discord. If I could just do this. Fundamentally very type of technically overbought, talking about oil here. Then I can bring up oil on this chart. So I had a bit of a pull today. We tapped that 80. And what this is saying is, hey, a bullish first half for oil could come if Donald Trump leaves sanctions intact to negotiate over Ukraine with Russia, then if Brent continues to trade around the $80 a barrel mark and not much higher, then the underlying assumption must be that new sanctions will not be enforced harshly, and that they will be lifted by Donald Trump within a couple months max. So there's good research here, and all this stuff is free. You don't need to be in the trading group right here. You see, these are the notes, good summary on all the central banks and whatnot. Here's a little economic calendar for the week ahead. And then trade logs where you can see all the trades that I put on and share your own as well in a more private group. And if you want, you can come in here, share your trades in a more public forum. We got quite a few in here. I see Ismail's. Yeah, trying to get short gold. I see that. Go ahead and put this back over there. And net, if we get back over to, where is it? We don't need this anymore. Yeah, back to Trump. There's a lot that kind of hinges on essentially what Trump's going to do over the entirety of next week. It's going to be a lot of executive orders on Monday. It's going to be a lot of commentary. He's going to probably try and come out strong, talking about stuff potentially. We really just have to be prepared for whatever he says and respond to what he says as quickly and as fast as possible. And that's not easy, considering you don't know when he's going to say something or when his secretaries of the different departments are going to say something. You just don't know. So that's where having a squawk like Financial Juice can really, really come in handy. Now, on to this RB&Z stuff. We kind of already glossed over the important bit. Okay, there's an economic data point coming out here, and this can make the New Zealand dollar weak. On top of that bit of information from the window I closed, talking about how, there's more commentary about the guys at the Bank of Japan, the governors of the Bank of Japan getting more hawkish, probably going to hike at the next meeting. Well, NZD/JPY, if we check that out, right, because that's what the heat map told us, you go to New Zealand, JPY, look at that. That one's moved. Probably one of the, I think that's actually the largest mover here. What understanding a little bit of economics will do to you. So check that out. It has moved quite a lot. It's moved 60 pips on the day, which, depending on your leverage for yen pairs, can be a lot or a little. Pound yen, though, it's moved less percentage-wise, but it's moved about 111 pips. Yeah, from here to here, it's moved about 650 pips. That's kind of insane. Let's see, we are still 16-ish minutes out from retail sales and jobless claims. And we'll get to see if that side of the labor market improves, and if that side of the labor market continues to improve, well, that could help with setting expectations that the Fed isn't going to try and be so tight. And speaking of that, let's get into reviewing US CPI, because there's a lot of discussions, and I just wanted to bring up a series of different opinions in different points of view of how other groups. So let me go ahead and make this larger so then you guys can see a bit more clearly. So we're going to do a review of some CPI quotes, some CPI reviews. Wells Fargo And you'll see this actually as a common denominator between all of the analysis, is people are looking at today's CPI report to try and forecast what the PCE is going to be. And there's this constant theme of saying, hey, because CPI came out the way that it did, we actually expect PCE, the quote unquote Fed's preferred measure to gauge inflation, and saying that it only rose 0.21% in December for last month. And that seems to be the consensus. Yeah. More on PCE expectations. This is from X. This is from Twitter. With the December CPI and PPI in hand, forecasters who do the math now expect core PCE to have risen 0.17%. This annualizes to nearly 2%, so the Fed could be pretty happy about this. This would hold the 12-month rate at 2.8% and lower the 6-month and 3-month annualized rates to 2.3 and 2.2% respectively. So you can see headline and core forecasts for a bunch of different institutions here. And it seems to be pretty good. It seems to be disinflationary. This guy, Deep Knowledge Investing, right now, the pre-market indices are up huge, solely because core CPI came in 0.1% below expectations. And he says, I'll suggest the market is making too much of a very small discrepancy between the data and expectations. And that seems to be a common call out for this most recent CPI. People are saying, God, look at the headline number. It's up. And the core number, it's down. Why is everybody trying to get risk on now on this? This would mean that the Fed stays higher for longer. Why are people doing the opposite? And this is kind of where Warren Pies steps in. And I was like, oh, here's a decent explanation. Core CPI is down to 2.2% month over month. Services was 90% of the move. The shelter component was down 50%, which is one of the stickiest parts. Oh, my bad. Get into reading mode. Yeah, shelter was about 50. The shelter component was down 50%. Goods aren't re-accelerating, only contribute 10% of the core move. Super core is also down. Probably, he says, Warren, probably the first of many bullets shooting the higher for longer thesis in the head. And back in December, Warren was actually expecting exactly this. So the guy was already on top of it and setting that as his expectation. I think it's finally time to start looking for the true step lower in shelter inflation, and there you go, shelter down to 50%. And just to check up on the time, we got, I think, 12 minutes, 11 minutes. Yeah, 11 minutes until retail sales. Just want to keep my eye on that. Okay, Parker Ross. While there's still some components that need to normalize further, most notably shelter, the Fed has to be encouraged by this week's inflation reports. Though the monthly noise, there is no sign of a broad-based reacceleration of inflation. So that seems to be the main focus. The shelter component came down, so the argument here is that the shelter component is being less sticky than it is, and that's one of the main hangups with CPI staying really, really high for longer. And there just was no reacceleration month over month. Now, if you look at the headline number, you'll be like, oh man, but the headline number. It's like, yeah, but the shelter is much more important for the longer term expectations getting met. So sure, short term, short term is short term. And this is the rest of today's gauntlet. We have initial jobless claims, Philly Fed, business conditions, Gravel's speech. Speech is an update on Bank of Canada's quantitative tightening program. He's going to ask we're going to be asking what are the changes, if any, to the Bank of Canada's quantitative tightening program there are. How fast is the Bank of Canada going to continue its quantitative tightening? For those in the trading group, we went ahead and did an analysis like 4 days ago on, hey, here are some of the things that we need to be looking at. And I'm pretty sure I went over this in a stream or two ago, but this thing's happening today. So either you're in the trading group or feel free to watch the stream after this one that was held on like the 13th. And New Zealand business manufacturing PMIs, and then consumer inflation expectations. Before I get into the events for tomorrow, there is one thing here that this manufacturing PMI boost reminded me of. Next Friday, we are getting flash PMIs. This is very, very important. We are getting flash PMIs next Friday. So on top of all the stuff with the inauguration, we have to deal with the flash PMIs coming in right at the tail end of the week. It's not going to be an easy week to trade at all. I have no envy for anyone who's trying to put on positions next week. Don't get me wrong. If there's something incredibly obvious to do, after you have the information, after all the uncertainty is gone, it's a lot easier to say like, oh yeah, I should get positioned this way or that way. But until that data actually comes out, you have to be taking calculated risks. And if you can't do the calculations, don't take the risk. All right, events for tomorrow. We have on the last trading day of this week, tomorrow, Euro area inflation, Bundesbank, Nagel speech, ECB speech, and then we're going to be asking what is going to be the reactions for inflation, the Euro area inflation from both of those speakers, and then housing starts, building permits out of the US. See if there's any huge surprises out of that. We'd like to see more houses built in the US. There's kind of a housing shortage here. But if housing permits aren't getting out there and housing starts aren't getting out there, then that could make housing more expensive, and then that shelter component can stay up. But that's a long lead lag when you're looking at housing starts and building permits, right? There's a lead lag between when the house actually gets permitted to when people start building it, to when the house is finished being built, and then when the house actually gets sold, right? That could be multiple years process. But that's why you want to have a good backlog of, houses getting built and permits getting issued. So then, a few years out, it's like, okay, we know housing isn't going to be that huge of a problem over the next, 6 months out or whatever. Or 18 months out. So those are the notes for today, and this is the whole thing here for Bank of Canada. So we don't need those notes anymore. If anybody wants me to cover any particular chart now at the moment, now would be the perfect time to ask me to go ahead and look at a chart. Otherwise, I'll go ahead and check out the G7. And I see some movement in gold. So let's see here. Yield spreads seem to be holding up. They're not decreasing any further, so they're not getting worse at the moment. let's go ahead and check out our yield spreads here. That actually might be the low of the day. You can see high probability of finding a low on the day for any given day. So if that is the low for the day, where would we end up closing? Probably just a little bit higher, call it 102.75. Something like this. And color that blue. And let's set an expectation on that. Alrighty. So that's now our expectation, just a bounce into the close. Not a huge deal. That's only about 8 pips. I'm not sure that's really worth trading, but it's an expectation. Not every expectation needs to be traded, but it's good to see when you do set expectations over time, how frequently are your expectations actually getting met? How close are you to getting your expectations met in time and in price, from where you expect the move to start to where you expected the move to end? Do that over a long enough time, find out how to set better and better expectations, and it'll become easier and easier to trade, because just naturally setting, if you set an expectation and every time I set an expectation, I'm right about 60-70% of the time, you can kind of find the expectations that don't work out, find the characteristics there, and just be like, okay, I need like 1 or 2 extra conditions here for my expectations to get met. Or by knowing the failure rate of your expectations, you'll be able to manage your risk more accordingly, because you'll know your failure rate on setting bad expectations on your own. Very important metric to find out. Let's go ahead and check the Aussie. And it looks like we're going lower here on the Aussie. I would not be surprised to see this thing go lower. All right. And we'll follow up on these expectations tomorrow to see how we did. And it looks like, yeah, this is already done. So no expectations here. This thing is trading in kind of no man's land at the moment. Maybe it just ends up closing around here, just around 55.9 in the 55.8 handle. But at this point, it's not really worth setting an expectation on New Zealand dollar. Looks like it's going to continue to get hit pretty freaking hard here. Let's actually go ahead and check out the seasonal expectations on this. Yeah, pretty negative seasonal expectations up until Wednesday. And if I'm not mistaken, the 22nd is actually when the quarterly CPI comes out. So right around here, the 15th trading day, yeah, check that out. We get pretty much flat expected value. So, the average trading day is positive, but the expected value more negative. So I'd kind of hold my tongue trading this one until we get like closer to the either. I mean, I'd want to wait till like middle of February before trying to get long New Zealand, honestly. I'd want to get past the 50 basis point rate cut, honestly. As much as I'd like to try and I really actually wouldn't like to try and get long this. This is something that has to wait till like late February to get long. This is stay I would think I'd want to stay short this thing until like the middle of February, late February, at kind of a minimum, until that 50 basis point RB&Z rate cut actually comes in. And we get the more hawkish policy commentary out of the rest of the RB&Z, kind of officially, right? That makes more sense to me. Let's see here. On the UK, it's just freaking money printer, 500 pips in the last 30 days. Yow. Quite positive seasonal expected value. I'm not really. This is going to actually hold up, because when you have non-seasonal moves like this that are due to fiscal and monetary policy, and then also, guys, trading Trump's inauguration next week, he's going to be issuing executive orders throughout the entire week ahead. It's not going to be easy at all trading next week, because every day he could be saying something new at any minute. And then on Friday, you ended up with some of the most volatile economic data you can get, which is flash PMIs for the G7. So I re-emphasize that point, because it's not going to be an easy week to trade next week at all. Like, one of the main reasons the US dollar has been getting stronger over the last several months since Trump has been elected, and the whole month before he was elected, was explicitly because of tariff uncertainty. And we're going to maybe get a resolution to that on the 20th. I don't think we'll get a resolution to it maybe right on the 20th. I think we'll begin the process of resolving that uncertainty. The whole idea, for example, from like remember those stories earlier in the week of Bloomberg and the Washington Post saying, "Oh, it's going to do gradual rate cut." And then Trump had to come out and say, "No, we're not. We're not doing that. Those are all fake news. That's all fake news." And then prices immediately reverse, right? I think I pointed it out on another stream, but it's very easy to go to like a 15-minute chart way back here. Yeah, I'm not terribly sure exactly where the spike was. Oh, it was on the 6th. It was January. Yeah, this whole thing. I did catch the short on this. I out on it once, and then I shorted it. I didn't stop out, and then I held it for a nice little 100 pips there. That was very nice. That was very, and you can see I had positive expectations. I wasn't expecting this huge drop off here, but I had positive expectations into this price for since I wasn't expecting. Oh, it looks like something's going on with the internet. Yeah, sorry guys. It looks like YouTube is kind of being a pain, and all of a sudden it is now. Oh, hold on. The internet's back. It's no longer dropping frames. Everything's good. I don't know what the hell happened there, but all of a sudden YouTube just like said, nope, no bueno. All right, we got the news now. Canadian starts, retail sales came in lower. That'll be disinflationary. Initial jobless claims came in higher, so that's slightly higher unemployment. So that's actually kind of good if you want the Fed to cut and be more lenient. Let's see here. Core retail sales also came in lower. Whoa, the US Philly Fed index came in at 40. That is insanely positive. Wow. I want to read the report on why the Philly Fed came in so freaking positive. Is there any news out of Bloomberg or out of trading economics? Let's see here. Retail sales in the US increased 0.4%, less than expected, the least in 4 months compared to an upwardly revised 0.8% rise in November and below forecasts of 0.6. So this is pretty good, I'd say. Even though, yep, there it is. The breaking news from the RBN, well, rather the ECB, was that, the minutes essentially say that the ECB is in favor of more gradual rate cuts. Inflation is expected to gradually decrease. Despite easing financial conditions due to the rate cuts, borrowing costs remain tight. ECB remains focused on ensuring inflation goes to its 2%. Gotcha. So all's well. Let's check out how the Canadian dollar is doing. That one got hit pretty hard. It's holding in there. It's staying below 144. I don't know if it'll get past 144. Maybe on inauguration day it'll get past 144. It's not easy trying to be risk on in the FX right now. However, nailing the US dollar short trade is going to be like a big deal. Pretty much every single major bank and publication has talked about how if you can nail the US dollar short trade, the timing of it, you can probably make a lot of money, is what all these commentators say. So it seems pretty muted as far as the response goes. The high for the day on the dollar, probably in. Yeah, that's probably the top for the day on USD CAD. I'd be willing to expect a bit more of a pullback at this point, but in all seriousness, this could be held up by whatever Gravel says at his quantitative tightening speech later today. So kind of expect this to be a bad expectation. I don't expect this expectation to be met. I'll be very surprised if it actually is. Otherwise, it seems like Euro is holding up quite well. We could quite easily now, I think, reach this expectation by the end of the day quite easily. And it seems like we got a bounce here in the Aussie, so we might not actually hit this thing unless people really put the gas on selling this. And who knows, that might come later today from what was it? There was an event later today for Australia. I believe it was a survey. a business survey, if I recall correctly. Let's go ahead and check out oil's response. It's been getting a little bit of risk on here since the announcement on the initial claims. And let's go ahead and check out gold. Gold is holding up quite well. Let's check out the high and low range for the day. Well, that's probably the high of the day here on gold. So probably a more like steady pullback also on gold into the end of the day. Set that as our expectation. We'll follow up on these expectations in tomorrow's stream. Alrighty. A bit less of a busy day. We came back and I started streaming again for, I don't know, the first time since May of last year. So I gotta thank you guys watching every day on these streams. And again, if you want to hang out in the Discord after the stream, go ahead and hop into the voice chat and we'll play a game of poker. Over here in GTO Wizard. If I just hit start game, sit, and there we go. I'll go ahead and I'll put this in the general chat of the Discord, and I'll put this here into YouTube Studio. Yeah, there you go. You guys should see it. And you guys know me, I use this as my end of stream flag now. Hey, come play poker for a game or two, and we'll just hang out. And if you want to talk trading, we can continue to talk trading. If you want to talk something else and just chill, talk indicators, talk anything, really, this is the time. And a nice chill game of poker. Or just to catch up on life and whatnot, you know? Okay, you guys. I think I am done for the day. I am looking forward to tomorrow and the end of the week. We'll see how these expectations hold. You know, just daily expectations. And with that said, I will see you all in a bit.